Welcome to another accounting video. In this video we'll be doing a fixed asset question, right? It also include fixed asset disposal, but you did this in grade 11. It's just a revision because the examiners like to test on it. Fine. So remember, for fixed asset note, because we are asked to prepare a fixed asset note given the full information for which the financial year ends 2020-28 February. So for the fixed asset note, remember it's divided into three parts. This is the beginning. That's the beginning, and then we have the during, and then we also have the end, right? It's beginning, during, and the end. I'll write it again here. This is the totals column. Don't worry, it doesn't matter that much because the totals you just add. That's simple math. Sometimes they don't ask you to put the totals column. So that's the beginning of the year, right? And this is the during, and then we have the end. Fine. So let's just prepare the fixed asset note. Prepare fixed asset note given the full information. Financial year ends on 28 February 2020. So we have land and buildings. This is for 2019, at the end of 2019, right? And this is at the end of 2020. These are balances at the end, guys, right? So for land and buildings, we have 1 million at the beginning. Let's start with land and buildings. We have 1 million at the beginning. Land and buildings do not depreciate, right? So accumulated depreciation will be nothing. Then carrying value at the beginning is still 1 million. Movement. This is movements. This is a movement column. Yeah, you don't have to write anything here. Then we have additions at cost. Let's see. In order to see land and buildings, we had additions or disposals. You must compare the two figures. If you can see, we had 1 million worth of land and buildings, but this say we have 1,350,000 worth of land and buildings, meaning we acquired more land and buildings, right? We did not sell. So we check for the difference. 1,350,000 subtract 1 million, it gives you 350,000. Right? So it's additions at cost. Every additions you put the cost amount, not carrying value. There are no disposals, no depreciation, carrying value. Carrying value now it includes the additions and the cost, right? So you have your carrying value of 1,350,000. No accumulated depreciation. Your cost 1,350,000. You are done with your land and buildings. Let's go for vehicles now. Fine. Vehicles, depreciation on vehicles is calculated at 15% diminishing balance method, right? So what is the cost at price of the vehicles at the beginning? 200,000 at the beginning. What was the accumulated depreciation? 30,000. This is at the beginning. Carrying value at the beginning, 170,000. Then we have the during. Did we have any additions? The cost price is still the same, so we did not add anything, right? It also means we did not dispose any vehicle, right? Because the cost price is still the same. Sorry for putting the bracket under cost. And then depreciation for the year. Let's calculate depreciation for the year. So because we did not add anything or sell anything, depreciation for the year will be based on old vehicles, and it's calculated using diminishing balance method. So we're going to use the carrying value. You're simply going to say 170,000 multiplied by 0.15 times 12 over 12, right? Let's see what will it give you. It will give you 25,500. That's the depreciation for the year. Now the carrying value for the vehicles is carrying value at the beginning, subtract the depreciation, right? Because now we're looking for the new carrying value. It's this 144,500. So you say this subtract this, right? To get this carrying value minus depreciation. Accumulated depreciation, it's accumulated depreciation at the beginning plus depreciation for the year. So it will be 30,000. It will be 30,000 plus 25,500, right? Which will give you 55,500. Then your cost, of course, will still be 200,000. It's a closing balance. But if we had added any additions, we're going to say cost at the beginning plus additions at cost, right? So this is cost at beginning plus additions at cost. Fine. Let's focus on the equipment, which seems to have a lot more information than the other ones. So the equipment is depreciated at 10% per annum using the cost price method. Fine. Equipment worth 10,000 was sold on 30 May 2019, right? During the financial year. Accumulated depreciation on date of sale was 2,500, right? That's the accumulated depreciation on date of sale. Fine. So what's important here, guys, is to understand that we are disposing equipment, right? We're disposing equipment. So when you dispose an equipment or a fixed asset, you must follow 3 steps. Step number 1 is to cancel the cost price of the asset. Step number 2, you cancel the accumulated depreciation to date of sale, right? Step number 2. Step number 3, you now consider the method of disposing the asset. There are 3 methods actually. You can sell it for cash or on credit or trade it in. Right? Those are the steps. And for this method, it consists of part A. Part B, you check for profit or loss. These are the steps you follow even when doing the asset disposal ledger account, right? These are the steps that you follow. I'll do the asset disposal just after doing the fixed asset note. These are the steps you follow. So let's do the equipment first. The cost price was 40,000, right? And accumulated depreciation on equipment is 10,000. Then carrying value is 30,000. We sold equipment at 10,000, right? We sold equipment at 10,000. So we did not buy, so there are no additions. We sold at 10,000, but we need to look at the disposal at carrying value. So you need to calculate the carrying value. So please note, they said equipment worth 10,000 was sold on 30 May, and the accumulated depreciation on date of sale, meaning the accumulated depreciation when on 30 May was how much? 2,500. So you can simply calculate the carrying value by say 10,000 subtract 2,500, which is 7,500. That's the carrying value. Disposal at carrying value, right? And please note, you see, the carrying value of the equipment is 7,500, but we sold it for 6,000. Therefore, we made a loss because we sold it for less than what it is worth. We made a loss of how much? 1,500, right? That's the loss we made. That's what we'll record under the asset disposal section. Oh, okay. So I jumped into conclusions there because I see they said new equipment was bought on 1 September 2019, right? So I jumped into conclusion. Fine. So we now know that we sold equipment and we also bought equipment, right? So let me just remove my dash here. Fine. So the most important thing to look at, we need to calculate the cost price of the equipment that we bought. It's easy because we have cost price at the beginning and cost price at the end, right? So what we have to do is to solve for X. You say we had 40,000 cost price at the beginning, right? We sold equipment worth 10,000. We also bought equipment worth X. resulting in the cost price of our equipment being 50,000. And when you solve for x, it will give you 20,000. That's the addition, right? So that's the addition. Fine. I hope that was clear, guys. You just have to solve, right? Then depreciation for the year. How do we calculate depreciation for the year? We divided. If we did not have the accumulated depreciation on date of sale, we're going to calculate depreciation for the year for the old equipment, for the new, and for the sold. But now, because we had the accumulated depreciation for the sold, there's no need to calculate depreciation for the year. So you just calculate depreciation for the year for the old equipment and for the new at cost price. So what's the cost of the old equipment? It is 40,000 subtract 10,000 that we sold, right? Which is 30,000. Then this 30,000 is the one we're going to use to calculate the calculate the depreciation for the year. 10%. Remember, the old equipment has been with us for 12 months. Therefore, 3,000, that's the depreciation for the year for the old equipment, the equipment that we haven't sold, or the equipment that that has been with us for the 12 months, right? And then this one was bought at 1 September, right? It was bought on 1 September. Therefore, it was with us from September, October, November, December, January, February. 6 months. It was with us for 6 months. Right? So you must calculate that depreciation for 6 months in the current financial year, right? In the financial year ending at 28 February 2020. So what's the cost price? It's 20,000. Simply say 20,000 multiplied by 0.1 times 6/12, which will give you 1,000 rands. It will give you 1,000 rands, right? Oh, and then okay, so this simply means that we also have to calculate the depreciation for the year for the sold equipment. Right? We also have to calculate the depreciation for the sold equipment. Reason being that this column here, or this whole depreciation for the year, the amount that we're going to enter here is depreciation for the year for all the equipment that we have. Even if it's sold, we incurred a depreciation expense. So what we have to do, we count when this asset it was in the business for how many months? February, March, April, May. That's 4 months, right? Cost price is 10,000 multiplied by 0.1 times 4/12, right? Which will give us, it gives us 333.33. So please do not mind the commas. Usually in the exam you'll get just a straight answer. Don't mind the commas, because this question I was the one setting it, right? Fine. So it's 333. That's the so total depreciation for the year will be 3,000 plus 1,000 plus 333, which is 4,333. Then you'll have a depreciation for the year 4,333. Right, 4,333. So the carrying value at end. To get the carrying value at end, what you have to do, you just say carrying value at the beginning. Let me use another color so that you can remember. I'll use blue. You say carrying value at the beginning plus additions at cost, subtract disposals at carrying value, subtract depreciation for the year, right? This it's a trick you can also use when doing the cash flow statement. So when calculating carrying value at end, right, you just follow those columns that I've marked there. You just follow them the way they are. You actually add those amounts, you see. So you're going to say, but let me write it here, carrying value at end is equals to carrying value at the beginning plus additions at cost, subtract disposals at carrying value, subtract depreciation for the year. That's how you get carry value at the end. So it's 50,000 minus 7,500 minus 4,333. You get 44,917. Right, and then your accumulated depreciation, it's simply what? It's simply your depreciation for the year. It's your because you dispose an asset here, it's going to be your depreciation for the year plus accumulated depreciation at the beginning. Subtract the accumulated depreciation of the asset that we sold. So in other ways, you're going to say 10,000 when calculating your accumulated depreciation. You're going to take this 10,000. Let me use another color as well so you can see. When calculated, this only changes when you have sold items, guys, right? When you have sold a fixed asset. So you're going to take this, the accumulated depreciation at the beginning. You also add it to what? You add it to the depreciation for the year, and then you subtract the depreciation of the asset that you sold. Let me just write in yellow here. Accumulated depreciation at end is equals to accumulated depreciation at the beginning plus depreciation for the year. Subtract the accumulated depreciation of the sold asset. So it will be your 10,000 plus 4,303 and subtract how much? 2,500. Then you get 11,833. Right, you get 11,833. This is accumulated depreciation, and then it will give you a cost of how much? Okay, guys, so this figure here, it's supposed to be 8,167, right? You follow the same calculations, just that I somehow pressed the calculator in an incorrect way. So it's 38,167. You still follow this formula, carrying value at the beginning. All these you follow them, the ones I ticked with the blue pen. Then this and this, they must add to give you how much? They must give you 50,000, in which they do, right? Because when you say this, subtract this, it must give you this. It must balance. Now this carrying value, these are the carrying value, the values you're going to take to your bank balance sheet, right? Your balance sheet, not bank statement. So let me just do the asset disposal. Let's prepare the asset disposal account. So now when you do the asset disposal account, you follow the same steps. You cancel the cost price. So when you cancel the cost price, it means you're going to go to the equipment account. Since it's the debit side, this one is the credit side. You cancel the amount here, and then you write asset disposal, right? So the contract account, so you created equipment, therefore you're going to debit equipment here. You're going to debit your asset disposal account, equipment, by 10,000, right? And then what you do, cancel accumulated depreciation, the same analogy. In the accumulated depreciation account, you would have cancelled it on the debit side, right? Contra account, what you have written, asset disposal. So here you take it to the credit side. You write accumulated depreciation on equipment. How much was it? 2,500, right? The third step, consider the method of disposing. We disposed it cash, right? We sold it for cash. So we are going to do what? We are going to debit bank account, contra account, asset disposal. So we're going to debit. So it means since you debited bank account here, we credit the asset disposal. contra account is bank, right? Contra account is bank. How much? 6,000. Then remember, we made profit. We made a loss of how much? We made a loss of 1,500. I think I calculated that loss somewhere. Okay, yes, I calculated that loss. Here's the loss, 1,500, right? So we made the loss. So a loss is an expense, right, guys? A loss is an expense. So if a loss is an expense, if we had the loss account, we're going to debit the loss account. But now, since you debited the loss account, contra account is asset disposal. So now, since you're preparing the asset disposal, we're going to credit by how much? By that loss on disposal. How much is the loss? 1,500. And your asset disposal account must always balance. So that's 10,000. That's also 10,000 when you add them. It must always balance. Okay, that's it, guys, for this video. See you on another video.